Good morning, good afternoon, good evening to everybody taking a moment to check out my new update. So, if you remember last time that we had a video of this type, we kind of discussed Bitcoin on in a cyclical manner. You know what is it that kind of seems to act as a indicator of sorts for both bear and bull markets? You know, and how important is this information? Well, as we've discussed previously, and just to kind of do a quick recap, generally speaking, we experience bear markets when we have a period of consecutive total lunar eclipses. Towards the end of those consecutive lunar eclipses, we see a significant low being formed for the markets. Now, something that's quite interesting this time around is that we didn't really have a consecutive in this case, right? And we'd kind of discussed some scenarios in our last video. Are we going to see a lead into this or a lead out? And, well, case in point, we saw a lead in, which ultimately led to our capitulation. Now, something that you're probably going to see in here is that, well, we're all screwed. We're in deep doo-doo. It's over. The bear market's barely begun. And bulls are fucked. And I'm here to tell you that none of those things are true. Why? Well, take a look at what happens each time we have our last consecutive eclipse for that particular cycle. Just take a moment, take a gander. All the way back to 2011. The same thing just keeps happening over and over and over again. And every time we come here to these types of periods, it's almost natural from an emotional reactive perspective to say, no, this time is different, or, oh no, things are looking really bad. I mean, do you think things looked great in December of 2018 or January 2019? No, certainly not. I can assure you that at the time there was a bunch of macro doomers and analysts who took what has happened over the last, several months, and this could apply to equities too to a certain degree, and say, oh, well, this is what's been happening, so that's what's going to happen forever. It's over. Or we have to go down this much, or it's not done until this happens, or, oh, we're not going to stop going down until this happens. But I'm here to tell you that generally when you hear that shit, and we have the events of, to the likes of what occurred today, market participants will make excuses as to, why it has to be so much worse than it already is. I don't think market participants felt very great here in September of 2015. And I think they had plenty of reasons that were supplied to them to not feel great. In January of 2019, there was probably plenty of quote-unquote logical reasons as to why the market needed to just keep dumping. Oh, it's at 3K. Oh, we got to go to 2K. Oh, it's at 150, or, it's at 200, 150. Oh, we got to go to 100. Oh, we got to go under 100. Oh, it's at 18K. Oh, well, we got to go to 10. It's, this is a cyclical asset. That's you're going to hear these assertions over time. I'm sure, this was, you may have heard, there'll never be another bear market again. Now there'll never be another bull market again. And just the extremes tend to bring out the best and worst in people. And these are typically the times that it's most intelligent to allocate. I actually began allocating a second time today. For those of you who follow me on Twitter, know that I did a 35% allocation upon the pi cycle bottom trigger in July. At the time, I also mentioned that when the lunar eclipse cycle ended, I would be doing another 35% allocation. Well, here we are, and I am in that process now, this month. I am allocating that 35%. And that will kind of be my complete allocation for this sector. The sector that we just completed. Now, you might be asking yourself, where's the logic in utilizing, something like this, right? Is it just because it worked before? Yeah, primarily yes. That is why. The other side of the logic is it's just kind of seems, absolutely ridiculous that something like this continues to work. How it worked here, how it worked here, how it worked here, how it's going to work here. Folks expecting a significant breakdown to like 10K, or, they're throwing out 8K targets, and just ignore the noise. It's simply not worth your time. Now, many of you probably came to this video not to hear about what's already happened, right? We've kind of covered that now. It'll be what will happen, right? Well, to start, we're going to have to break out of this period soon. Now, you may ask, well, what did the prior ones look like when we came into contact with us, right? Well, I'll take a moment to show you. In 2011, it was front run. We had already started expansion from the lows upon entering it. In 2015, it just about coincided with this is your last chance right here to bid, right? And we really got to zoom in to see it here. This is how, significant this is. We saw here, it had a pretty decent deviation the week of the eclipse. And the following week it had a drop. I think it was like 3 to 5%, a little bit. I mean, you can't even see it on here, but it was pretty minuscule, right? And so somebody could ask me, hey, well, does that mean that I go now? Do I go later? Do I, well, that's not really important. I think the most important thing would be to focus on getting your allocations in this month for the following cycle. Because whether it's now, or whether it's 1 week, or whether it's 2 weeks, or 3 weeks, it doesn't matter. It really, do you think somebody that bought here and then it deviated down the following week was upset they got it for that price? Absolutely not. Did they experience a slight temporal pain for a week or two? Yeah, sure, a couple percent drawdown. It's absolutely meaningless in this market. So what we want to focus on now is, what happens after we clear this? Because this is just a matter of time. Whether it's this week is the week that it's done, or whether it's the following week, it doesn't matter. Like, the point is like, get allocated this month, okay? Because when this train leaves the station, it's gone, right? And there's no guarantee you get that same level again, right? Typically speaking, like, this has kind of acted like once you break out of that accumulation phase, I mean, we wicked into it here, right? We did wick into it. Can I say with an absolute, confidence that this is what happens? We have a huge breakout of that accumulation phase and then we break back down into it. Or do we have a huge breakout and then it never really comes back to those levels again? to be quite honest, I don't think that really matters either. The important part is get allocated, right? Now, the remainder of the cycle, let's say you decide, over the course of the next, 2 weeks or something, you're going to allocate every day a percentage, and that way you can just, it allows you to kind of ease in. You're not having to hit market buy all at once. I get it. That's fair. Just make sure you get this in by, I would say, monthly close at the latest. Like, you want this thing, when it moves, and it's either never coming back or it would come back briefly, right? But we're talking that's like 10, 15 months down the road if you even saw something like that. And you say, well, why 15 months? Well, that's kind of a different assertion that I'll kind of go into a little more detail. The most important part is we can consider this area right here. It's kind of like our time periods between until, for the next bull cycle. Now, there's 3 phases in every market, and I'll kind of discuss what I have here, right? So first and foremost, the first phase, again, this, you can consider all this, you could consider this bull market, right? This was all bull market. People would ask me, well, why don't you consider this a bull market? Well, this to me is a bull run. And I think it's important to specify the difference between the two. A bull market is where you break out of the lows, right? And a bull run is something that happens after an event that's programmed every 4 years, and that's the halving. And I kid you not, when we do get closer to the halving, when that time comes, you will see people say the halving's priced in, or oh, it won't have an effect, or it won't do this, or it won't do that, or there's generally going to be some form of pessimism, just as there's abundant pessimism now. And I'm here to tell you that's also bullshit. The halving still has a significant effect on the price of Bitcoin. Now, is there a time in the future where the halving diminishes the supply emission by such a small amount that it isn't really as big of a deal as it used to be? Yeah, I do think that, it comes when you cut something in half repetitively. The change in emission is going to be, significant. And as you go on, the change in emission is kind of decreased, and we've kind of seen that with the diminishing returns over time, right? This is also compounded by the fact that it takes more hash power to grow the network. Now, with all that being said, there is a huge opportunity here in this market right now. So leading into the halving, a wide array of things will happen. The one thing I would say is, breaking out of the reaccumulation phase is probably step 1. Which I would consider kind of this range, right? This is the reaccumulation phase. This is what we've been in for months. And this is when, basically, this is going to be one of those things where you find out that there was a lot of large buyers throughout this period that were accumulating this whole time. And, these large buyers, whether they buy at 18K, 20K, 21K, they don't really care. They genuinely do not give a shit. They will take it from you at whatever price you're willing to give it to them for. That's just a fact of the matter. So don't give it to them. Not now. New market participants generally come in when we have these big runs, right? And that's when the folks that were accumulating here, they started to distribute around this 30K level all the way up and down and, whatnot. But they were distributing this whole time, right? And now they're accumulating. When they're distributing, it wasn't very obvious, was it? I mean, in hindsight, right? It's extremely obvious. But at the time, was it very obvious? Not really. And it's the same case here. It'll be one of those hindsight is 2020. People will look back and say, wow, It was so glaringly obvious that somebody was accumulating and holding a decent floor on this. It was ignored. Well, here we are again, folks. So, let's talk about something in terms of the future too now. We know to expect a bear market somewhere in this area, right? And as we discussed in our prior video, we get closer and closer each time. Now, whether that's something that gets right up next to it or slightly passes or what have you, that's kind of not really the important part. I'm going to give you some take profit conditions that you're going to need to keep in mind in the following years. And you're going to need to hold until past the halving. That's just how it's, how this works. If, you get the discount price, you hold through whatever sort of chop as we come out of here. We're going to come out, we're going to establish a new range and probably chop somewhere in here, right? So the important thing is that you secured bags at very opportune prices. That way this doesn't concern you. Are there going to be swing trade opportunities? Absolutely. There'll probably be a big high time frame swing opportunity, right? But I think for most folks, it's just most important to know when to allocate, when to do nothing, and potentially when to take profits, right? Most difficult part in this market. Now, don't get me wrong, allocation's still quite difficult, relatively speaking. But distribution is a whole different animal. So, what sort of take profit conditions should we be looking for, right? Well, I'll tell you mine. There is an indicator, and you've already heard about it, called the pi cycle top. And it's not to be faded. Similar to the pi cycle bottom. It denotes that we're at a significant level where it'd be opportune to distribute. Pi cycle bottom indicates and denotes it's a significant time to accumulate. Now, where have we seen past pi cycle tops and where have we seen past pi cycle bottoms? Well, I'll give you an example. We'll look at 2017, for instance, right? We had a pi cycle top trigger. This one was actually pretty accurate even on the lower time frame, somewhere in this candle, right? This last big green candle. As you can see here, this was in that December 2017. And then it had a big, lick, lots of liquidations, and a push back up to the neckline. This push back up to the neckline was the famous alt season right there in January of 2018. So we had a pi cycle top trigger here, a liquidation, and then the alternative coins topped afterwards, right? This was an important point for exiting the market. And the reason the market works like that is alternative coins are used as a methodology to exit the market. It gives a wider array of places to distribute than just a single coin. And that's why you see every single time we have one of those pi cycle tops, we have a big liquidation right after, push back up to the neckline, and that neckline is where you see here is like that first week of January. We had that big push to the neckline. And that was it for alts. So you had BTC here, it stopped at 19.5. Then you had, Ether go up to like 1400 here, right? And we all know what happened all the way through to the end, right? We had a similar thing actually happen this cycle. And the shape of this cycle was a little different, a little unique. I think could be partially attributed, as I said, in the July video when we were here, I was like, this looks different. There's something very unusual about this. We have consecutive lunar eclipses denoted in these dark pinks. And then here, you don't. And that's why we saw something completely different. And then people may say, hey, well, we actually surpassed the pi cycle top a little bit, right? And it's like, marginally, but not by much. It was still a significant indicator, right? Distribute, and it worked. Again, just keeps working. In April, we had that pi cycle top trigger around, I think it was 58 to 60K. And then we had the big lick down. See, pi cycle top was this little candle right here, right? The one I had my mouse over. So you see that little wick? And then we had the liquidation. Same thing. Liquidation. That liquidated. This right here, this candle right here liquidated. I remember that was in late April. That candle itself liquidated so many people because we didn't really have any sort of significant downside, you know, in alts, and there was kind of like a big bring down, and that kind of, you know, messed with everyone's head. And then it came back up to the neckline, and that's when the alt market went ballistic. Now over here, you know, people could be like, well, you know, alts went kind of ballistic here, but it was definitely a more select sample size of alternative coins that went up, you know, considerably. A ton of alternative coins never really made it back to where they were here, right? There was only, you know, a couple select, you know, you had your Shiba and Sol and all that good stuff. But the important part was, you know, if somebody, you know, decided to follow those take profit conditions there, aside from, you know, a few select new coins and kind of random names, this was a, you know, an intelligent time to distribute back to cash. And I'm kind of under the impression that we can continue to see the same kind of price action over time. So I'd say in terms of take profit conditions, I would target, well, get that pi cycle top. You know, you get that big liquidation candle, usually in the week that follows. And then you have about 2 weeks after that lick candle clears out to distribute your altcoins, if that. I would say a week and a half, maybe, right? Week and a half, 2 weeks. So keep an eye out in the future after our halving, when we actually go on the bull run, right? Because after this, it's just bull market. It's not bull run. We need a halving. We need that catalyst for the full-blown bull run. But we're gonna rip out of this hole. We're gonna dig our way out. And this, you know, just consider this the bears' last supper. Bears had their little last supper. They had their little last supper. Had all the reasons in the world to believe what they believed, and had all the reasons in the world to short it all to zero, and the market said otherwise. So, to kind of just review, allocate this month. Okay? Then, wait. Wait a considerable amount of time. When I say a considerable amount of time, I don't mean it's going to take a considerable amount of time to rip out of the hole, right? Because it will rip out of the hole, and you know, that's always a bad feeling when you have something that's kind of been acting in an accumulation phase for about, you know, few months, and you didn't capitalize on it. That's a crappy feeling, and then especially when it rips out of the hole. Like, do you think all these folks that didn't accumulate here when this thing was happening, do you think they were happy? No, they were pissed. And they had to chase it up here and get screwed again so they could capitulate here, right? Another thing I would kind of want to discuss too, this is kind of an off-the-side caveat. I wouldn't consider this as part of this theory, but I would consider this as, you know, maybe an extra side note to consider in the future. And that's the fact that Bitcoin has kept a pretty good track record of having buy opportunities every 15 months. It's very unusual. And these buy opportunities can be split into 3 categories, right? So for instance, you have December of 2018 and March of 2020, we're approximately 15 months apart. Then between March 2020 to July, I'm sorry, you had your other 15-month opportunity. Now, what's different about all these, right? Well, the first one was a significant low, right? A significant low for accumulation. The second low was a pre-halving swing low, right? And the third, well, I shouldn't say swing low here. A pre-halving low. We'll call this accumulation low. We'll call this a halving low. And then in June, July, you had a swing low. A swing low is just something that's, you know, it's meant to be a swing trade. So, you know, if we go back to, you know, prior to that, right, we go to September of 2017 here, that was 15 months prior. That was the swing trade for that cycle, right, which would be the equivalent to this July here, right? So with that in mind, if somebody asks, well, if I accumulate here, will there be an opportunity for me to buy in the future new coins that come out that don't exist yet? And I'd say most likely, right? Because the new coins that don't exist yet are pretty important. But I wanted to spend the first half of this video driving this point home. This very good accumulation opportunity for Bitcoin, especially in this time period. And so we look at that, what's that 15-month opportunity? Well, we come back over here to September of 2015 when we made these lows right here, right? And this would kind of be considered that 15-month interval, right? And here is the end of our lunar cycle. So, you know, we can kind of consider like this level's important. It's very important to the market, and the 15-month interval seems to agree, and so does the lunar cycle. So what would be the next 15-month interval? Well, that'd be December of 2023. And that, to me, as I mentioned to you before, I did a 35% allocation in July. I'm doing a 35 allocation here. So, and this is just of my liquid net worth. So basically, you know, by this monthly close, I owe 70% of my liquid net worth in this market, with the expectation of waiting until after the halving and letting the bull run play out and distributing on the take profit conditions that I had mentioned previously, which are pi cycle top, wait for liquidation candle, pump back to the neckline, just take profit. Don't even think about it. Don't try and come up with reasons not to. Just do it when the time comes. Come back here and watch this video when that triggers, and maybe it'll help you to remind you why it's important to pay yourself, right? But that's not what we're concentrating on now. Not paying yourself, you gotta pay the market. And you gotta pay in time, right? If you want the gains, you gotta pay in time. If you pay, there's two ways to pay in crypto, right? It's just, if you pay with just money, then you're trying to make fast money, right? That's what a lot of bull markets, they bring out a lot of folks just trying to make fast money. I can make money quick, I can make money now. And they get fucked every time. It never fails. And you have people who understand this market is cyclical, and there's opportune times to load up. And there's opportune times to establish positions and wait. And I would say that's now, right? Mid caps, Bitcoin, that sort of stuff, load up. Coins that don't exist yet, well, obviously you can't buy them now, can you? But if we were to kind of draw the assertion from our 15-month intervals, that would put it in December of 2023. So my point is get allocated, right? Swing trade if you want. You can, if you want to compound positions later on here. Not now. Don't swing now. Let us get a nice breakout, you know. But me personally, for the most part, I'm not really interested in that. I saw there's three key allocation points. The two main allocation points my core positions are in, right? And there's coins that don't exist yet, so when's that next opportunity potentially? December of 2023. Now again, this 15-month interval is not part of this solar lunar cycle. It's just kind of another pattern or assertion that I've noticed or had been pointed out to me over time. So I just wanted to share. So And it's helpful to kind of just make a plan and stick to it. I knew that I wanted to buy when there was a pi cycle bottom trigger. I knew I wanted to buy at the end of the lunar cycle. I did, and I am. Coins that don't exist yet, I'm going to give it my shot in December of 2023 in that 15-month interval. And then just wait until after the halving. Let the halving do its thing. Let it pull liquidity back in the market. Let it so that your mom, brother, sister, cousin, grandma are asking you how to buy dog shit coin. There's a better joke in there somewhere, but I think you get the point. There'll be a time when your friends and family will ask you about crypto again, and that's when you dump on them. Well, I should say pi cycle top, liquidation, and then push back up to the neckline. That's when you dump on them. But they'll probably be asking you about it sometime around there, right? So, again, just to review, allocate and wait. And that's about all there is to it. Allocate and wait. December of 2023, pick up the new bags. Post halving, be patient. Wait. At some point, a pi cycle top will trigger. Distribute the Bitcoin on the pi cycle top. Let the liquidation candle come and push back up to the neckline. Distribute your altcoins and walk away. Just simply walk away afterwards until we're back to here. But that's not useful advice now. What's useful is just accumulate, man. Just get over whatever fear you have. Get over whatever misconceptions. Get over the fact that everyone is scared out of their mind and is completely given up on their investments. That's very typical in these time periods. Very typical. Happened here, happened here, happened here, happening here. Same shit, different day. Well, I hope everybody found this helpful. And like, comment, and subscribe. Just kidding, I don't give a shit.